Good evening, everyone. Time for another silver update. This is a 1-hour chart of silver provided by netdania.com. You can click on the link below. You can see we're kind of meandering here, right around 27. We did have 27 as the bottom, real bottom area here of the last moves that we had. You can see it's now starting to be kind of a middle area, so or it may end up being kind of a top area. So we're still trying to test that 26 even level, and the market continues to bounce off of that. So it's hard to say if we're going to get through it, if we're going to have a significant drop, or just come down a little bit below it like we did here a couple times and then rally. It's really difficult to say, but it's 26 and 27 is just really a great price to be stacking at, so shouldn't look a gift horse in the mouth. Now, one of the big stories is going to be the euro. The euro made a new low today. I think they said it was a 20-month low or something like that, or 1-year low. So you can see the euro touched down to around 1.22 or so, and of course the dollar came up to decent high intermediate term of about 83.4. That's rivaling what we had back in the beginning of June. So I wanted to start off by talking about the dollar because there's a lot of talk about the strength of the dollar, especially in terms of the euro weakening and a lot of the things going on in the world, and uncertainty which has gone into strengthening the dollar, whether that's just a rush towards cash or treasuries, or a rush out of other currencies. Whatever that is, it's showing some strength in the dollar, and that's what I wanted to discuss. So I want to take you out to a long, well, the longest term chart we have here on NetDania, and take you out to the longest term chart here and see that we're roughly at about 83, we'll just call it 83 or so on the dollar. And as you know, the dollar is a basket of currencies, and so the euro came in the early 2001 in this area. Maybe, correct me if I'm wrong, 2002. So obviously the prices before that are going to be adjusted for the existing currencies that were there, but were merged into the euro. So currencies like the French franc, the Deutsche Mark, and those were merged into that currency. But these charts average it out. So if you look at the US dollar, you can see here we're about 83.4, and coincidentally, if we go all the way back to 1995, we're just going to pick that point because that's the beginning of the chart. We were at 83.4 in 1995. So you could say that because a lot of people are talking about how, you know, the dollar's gaining, or you put your money in cash or whatever, you could say that basically the dollar is unchanged. It hasn't lost anything since 1995. So for sake of comparison, I just wanted to show you some prices from 1995, and there's a number of things you can go to. This is a site called The People History, and this is the cost of living in 1995. So this is what things cost in 1995. You can see the Dow was at 5,000, about half of what it is. The interest rate was 8.5%. Now the cost of a new house was 113,000. I'm not sure what it is today. Quite a bit higher than that. Average income per year 34,000. Quite a bit higher than that. Average monthly rent, we're probably nearly double that. Cost of the gallon of gas, were triple that. Postage stamp, more than 50%. New car, more than 100% higher than that. Loaf of bread and coffee, I think those are dozen eggs, up a little bit, but not like these others. So when we look at those prices, some of them doubled, some of them tripled since 1995. And we go back to our chart of the dollar and see that it's the same there. That's going to make us wonder, how is that possible? If the dollar index is a measure of the worth of the dollar, and it has not changed, it has not declined since 1995, how is it possible that the prices of some of those things have doubled and tripled since that time? Well, that just goes to show you that you cannot rely on this index. That this index, as well as the other currency indexes, are free-floating currency exchange rates. So this is the dollar simply measured in other currencies. This is not the dollar measured in tangible assets. It's the dollar measured against other currencies that are also losing value. So if the dollar has lost, and if you go by those prices, it's lost anywhere from a half to 2/3 of its value since this time. But if you measure it against other currencies, it hasn't lost any value. So that is an example of how reliance upon the dollar index is completely deceptive, because all of the currencies that are in the basket that are used to make up this dollar index, and I think the euro is the most heavily weighted, they are also losing value. So the mirror image of this, of course, would be the gold chart over the same period of time. Now we can see that if we look at the gold chart, we can choose other currencies, and we can do gold in euros over that same period of time. And we've got a little bit of a lag here. We'll try to do another currency. We'll do gold in the Swiss franc, for example. Okay, there's our gold in the euro. Same sort of pattern. Gold spot in the Swiss franc, and same sort of pattern. So it's very deceptive to take these currency charts like the dollar index and use that as a measurement of the value of the dollar over this period of time, because it's not. This is the dollar declining in value, but the other worthless currencies that it's being measured in are declining as well. So when they all seem to be maintaining value, the truth is that they're all losing their value. And obviously things like silver and gold are things that are gaining value against all the currencies. Now I wanted to take you over to an article someone sent me, and the recent Mannarino video we feature on the blog. And if you haven't seen Gregory Mannarino, I'll link a video so you can see him. He's on our blog every day, and he puts out about a video a day. But in today's video, he was talking about silver being one of the rarest metals as far as what's left to be mined. In other words, what we're going to run out of first. And there's a lot of numbers that people have put out about that, how much is left below ground, how much is above ground. And I've made this point a number of times, but I just want to make the point so that people understand it and make clear what I'm trying to explain here. But let's start with this law of there's the laws of first, second, third laws of thermodynamics, but this is a law of the conservation of mass, or can also be stated the law of conservation of matter and energy. Basically, the law states, and of course that's in an isolated system, but the law of the conservation of mass, also known as the principle of matter conservation, states that mass in an isolated system closed to all matter and energy will remain constant over time. This principle is equivalent to the conservation of energy in the sense when energy or mass is enclosed in the system and none is allowed out, its quantity cannot otherwise change. So basically, to sum this up, for all intents and purposes, and barring special situations such as nuclear explosions or other things like that, the amount of matter that you have will be unchanged. The amount of energy will be unchanged. Now, when we start to talk about things like gold and silver, because that's what we want to talk about here as far as conservation, they're not going to be converted into energy. They're always going to remain gold and silver. So for all intents and purposes, there is a law of conservation of gold and silver. And the reason why I bring that up is because it can be deceptive when you talk about we're running out of silver. Well, we're not running out of silver. In actuality, we have the exact same amount of silver that we've ever had. There's only so much silver and gold in the earth. It's always been that way. The only question is where it's located. Is it located in mines? Has it yet to be mined? Or is it stockpiled? Or is it being wasted and thrown into landfills? So we still have just as much silver as we've ever had. In fact, we have more if you consider being mined, having it. So we really have more than we've ever had. The problem is that it's not being recovered. And that's what this article goes into. Only 15% of gold and silver used in high-tech goods is recovered. Worldwide, the annual manufacture of high-tech products, PCs, cell phones, tablet computers, and other electronic devices uses some $21 billion worth of gold and silver, 320 tons and 7,500 tons respectively. When these products reach the end of their usable life and become electronic waste, however, less than 15% of these precious metal deposits are recovered for reuse. The rest is discarded, creating potential health and environmental hazards. Well, that's not true of silver and gold. They don't cause any health hazards. But they are discarded, and only 15%. Now, I think the number is actually much higher for gold. And I know people personally who have salvaged the gold contacts in computers, so I know that's the case. But I don't know anybody personally who salvaged any silver from anywhere, except for maybe jewelry. So the question is, the key question is, if we're running very low on silver and the mines, and if you remember I covered the nationalization of the mine in Bolivia. If you get a chance, go and study that town that that mine is in, and the story itself. Do some research on that story. You'll find out that it has nothing to do with environmental anything. That there's actually this gigantic mountain above that town, and they've been mining silver out of it for the last 500 years. And they think there's a lot left in the heart of it, but they're running very low on the easy silver. The danger is that they're not safely digging these mine shafts. But of course, it supports the whole town. There's no intent at all to stop mining silver. So that's a ruse to say that there's some environmental story there. There isn't. It's just the government grabbing that. But the point is that that mine is getting very depleted. That's actually one of the few silver mines. It has other minerals as well, but has a lot of silver, and those are not like they used to be in the past. So the quality of the silver mines has gone down drastically. The amount that you can get out of each ore per ton, say, that is dramatically gone down, and the amount that is discarded has gone way up, but it's discarded in such small amounts that it's not recoverable. So the key, of course, to this whole thing is going to be price. If the price of silver were high enough, now if we just think about silver being used as metal contacts or something like that in electronics, at $26 an ounce, that's nothing comparable to $1,500 an ounce. Something that's $1,500 an ounce, you're going to put in some effort to salvage that or recycle it or do whatever you need to do to keep that from going into landfills. But something that's $26 an ounce used in very minute quantities, you're just not going to put much effort. It's just not economically feasible to do so. So what does that mean? It means the price is too low. It means the price is way too low. And the price wouldn't be this low if it weren't being suppressed. But of course, the price is being suppressed, and the reason it's being suppressed is the people who are maintaining this index, the dollar index, have a vested interest in keeping you invested in this worthless paper that is losing value. Even though the chart stays the same, the value is consistently going down every year. So let's close out by taking a look over at Tolving, and I wanted to point out that we're still getting little small rises in the spot price as far as junk. I like to keep an eye on junk because it's usually available in a lot of places and easy to keep track of. Over at APMEX, it's running at about $1 above spot for junk silver. That's one of the highest prices I've seen. You can see the best deal you can get here for junk at Tolving. The 40% is sold out. The 90%, which is their choice, and that usually ends up being the smaller denominations, the dimes and quarters, you can get at 55 cents above spot. And you can see anything specific, your 50 cent is going to be 70 cents above spot, and then the walking libs are sold out. So slowly but surely, gradually, it's creeping up. For the longest time that I can remember, junk silver had always been below spot or at spot, but you can see it's creeping up above spot, and I think it will continue as prices stay low. If prices stay low, I think it will continue. So these are still very good stacking prices. Is it possible that we're going to get lower prices? Yes, it is possible that we will get a drop finally below this multi-tested low here around 26. It's been tested many times, and it is possible that we'll get a shot below that. If we do, we may get a test of this 23 bucks or something around here. That's going to be the time to watch very carefully the junk silver and other silver availability. At that point in time, if you're buying, it's pretty much going to be guaranteed that the people who are selling silver to you are going to be selling silver to you at a loss. And of course, if you're actually buying silver from a precious metals dealer and they're selling it to you at a loss, it's a pretty high likelihood. In the very few times that I've done that, I've done it a number of times, but in the times when I bought silver when the people who are selling it are actually taking a loss on it, I've never really made a loss in that situation. And we'll talk to you next time.